I think we can see a second wave of panic into the Bitcoin ETF from people. I was speaking to a good friend of mine who's a kind of very well-known hedge fund manager, or ex-hedge fund manager, and one of the billionaire crowd. He's like, so much wealth is getting made in crypto, it's making the billionaire class nervous. He's like, okay, there's two groups here who all they care about, they're so rich, all they care about is where they fit on the rich table. He said they're all going to panic that they're going to lose relevancy. So they're going to panic in. They're going to panic into Bitcoin. The Bill Ackmans of this world and all of these people.
The cryptocurrency market turmoil persists as most top cryptocurrencies have seen a decline of at least 6% over the past 24 hours. At present, the CMC Crypto Fear and Greed Index, a gauge of market sentiment, still registers as greed but has descended to its lowest level since early February. This drop suggests that investors are cautious amidst the pullbacks, particularly with the 2024 Bitcoin halving event looming just days away. Negative press is circulating widely, yet Raoul Pal, the esteemed founder and CEO of Real Vision, remains unfazed. Pal, a respected figure in the industry, asserts that such fluctuations are intrinsic to the typical bullish dynamics of the crypto market. In a recent social media post, Powell emphasized that a bull market's role is to shake off and discourage investors, often manifesting in pullbacks of up to 35% before resurgence. However, Powell's optimism transcends conventional market dynamics. As a renowned macro analyst, he posits that this may not be a typical bull market. In fact, he believes it's merely a brief pause before prices soar significantly once more. During a recent interview on the Bankless podcast, Powell shared insights from a conversation with a prominent billionaire and former hedge fund manager. According to this mystery billionaire, traditional finance giants are growing restless as cryptocurrency enthusiasts threaten to surpass their wealth. Consequently, many are contemplating entry into the cryptosphere, viewing it as a case of, if you can't beat them, join them. Moreover, commercial real estate investors, facing a bleak outlook in their sector, are eyeing the cryptocurrency industry as a potential refuge. Powell predicts that much of the forthcoming demand will stem from BlackRock's IBIT and other spot Bitcoin ETFs, heralding the convergence of the multi-trillion-dollar traditional finance world with cryptocurrencies. This forecast underscores the profound impact these new financial instruments could have on the cryptocurrency market. Powell's bullish outlook extends to his price predictions. He anticipates Bitcoin reaching at least $200,000 before the cycle concludes in 2025, with a potential peak of $600,000 per coin if demand intensifies pressure on the limited supply. As we delve into excerpts from Powell's discussion on Bankless, we invite you to engage with the content by liking, subscribing, and commenting below. Join the conversation and stay tuned for more insightful videos.
Spoken here before, this is all driven by the liquidity cycle. It's actually a macro cycle driven by the refinancing of government debts, because everybody reset interest rates to zero in 2008. They set their government debts all at 3 to 5 years, gives us a 4-year cycle. That was the exact point, the launch of Bitcoin. It's also the US presidential election cycle. It's all the same thing. And election cycles, they give out candy to the kids, which is their way of stimulating. So it's all part of this stimulus cycle and debt refi cycle. So I don't think that changes because the debt issue is still too big. Okay, so what is the nuance of the cycle? Normally, we've only got 3 data points, but the crypto spring, which is the first year after the bear market, this has been a strong one. Bitcoin was up 150% or whatever. So that's pretty strong because we brought an extra source of demand in, as you allude to with the ETF. Crypto spring transitions to crypto summer, and that's usually happens after the halving. And after the halving, you see something that I know everybody's getting shit for right now, is if you go back to 2020, after the halving, what happened? ETH Bitcoin bottomed.
Right.
And then it slowly based, and then it started outperforming, right? That's when the market takes on risk and goes out the risk curve. And that's when you start to see Bitcoin dominance coming down, all of that kind of stuff. That's what the summer is. It's also altcoin season. It's when we hit what I commonly refer to as the banana zone, when everything goes bananas, right? A bit of crypto magic. Now, this banana zone is interesting to me because we've got this new source of demand. This is the most reflexive market ever, because the more people join the network, the more the price goes up. The more it encourages people to join the network, the more the price goes up. And obviously that reflexivity works in reverse, which is why we get strong bear markets. But basically, the world is underweight this asset because it's still a new asset and it's an adoption curve. So over time, more and more people join the network as investors or users. People see Bitcoin going up, and then you hear that your mate, you're playing golf or having a drink, and he made money in it. And then you think, I've got to make money in it, and this is the reflexive loop. So that's what crypto summer is all about. It's the FOMO, the madness, the insanity that crypto becomes. But it also drives adoption, drives money into the VC again. It flushes money through the system, allows people to build new product, which is the next cycle's gains and all of this stuff. So that's great. And then we go into fall, and this is where the complications lie. Crypto fall, which we historically 2025, they've generally finished at the end of the year. We don't really ever know exactly. I think this cycle's maybe started a bit earlier. I don't know. And falls can be the most tricky part. This summer is the easy bit. You just shut up and do nothing. And number go up. Fall is tricky. So if you go back to 2013, we had a 50% sell-off. People thought it was done because it had already gone up, I don't know, 20x or something stupid. It then corrected 50%. Everyone thought it was over. And then it moon rocketed in just a way you can't comprehend. Then you get to 2017. Same. 2017, everyone kind of thought it was over, early summer. And then it did, I don't know, 10x from there. It was bananas, right? That is really hard to deal with because 2021 was a stunted cycle. We never got the accelerated final leg. We had the huge correction. It went up, poked its nose back up in the highs, collapsed. Everyone's got PTSD from that. The real money was made in those previous two bull markets in terms of percentage returns. Everyone now assumes it can only go up 3x from the all-time high. There is actually no evidence of that. Maybe something was weird in the last cycle, because the other ones did a lot past the all-time highs.
During the interview, Pal outlines 3 significant scenarios he foresees unfolding over the next 12 to 18 months. His initial scenario posits that Bitcoin and other cryptocurrencies will reach new all-time highs in 2024, mirroring past occurrences in bull markets. This scenario, while less optimistic, factors in regular crypto fundamentals such as the halving event and typical 4-year bull and bear cycles. The second scenario, more profound and bullish, considers the influx of new affluent investors and tens of billions of dollars entering the cryptocurrency industry through spot Bitcoin ETFs. In this scenario, the potential price movements are open-ended, with no definite limits. Although Pal assigns a higher probability to the first scenario, he notes that the likelihood of the second scenario materializing is increasing steadily due to the growing interest in spot Bitcoin ETFs. Returning to the interview, Pal explores all 3 scenarios and examines how the macroeconomic landscape could impact the crypto market in the forthcoming months.
So how I think of it is a distribution curve. Middle is, it kind of does what it's supposed to do until sometime mid-H2 2025, it tops out, okay? That would be normal. That would be Bitcoin as a price target of, call it 200,000. Something like that. 3x the all-time high kind of thing. That's, I would give a 60% probability. I think there's a 20% probability that people who are calling this a left translated cycle, i.e. we brought forward demand because of the ETF, it dries up, we're overperforming for this stage in the cycle. I think people saying that tend to be one cycle people because they only saw the last cycle, because others have outperformed earlier on. So anyway, okay, there's a 20% chance of that. Then there's a 20% chance that this turns into a full-blown bubble cycle. 2013, 2017, because of this new dynamics. You throw in an ETH ETF as well. You throw in, the $65 billion of VC that went into the last cycle. Somebody comes up with some killer applications. Before you know it, there's 200 million people playing a game. There's, stuff like this going on. Okay, that could create something crazier. And I'm continually assessing these probabilities in my head. And because there's so many people who I've noted have PTSD from the last cycle, the stunted top, it's less translated, they're going to take it away from us, starts to move my probabilities that you get a correction and then a spike. You can't predict that because everyone's going to hate you if you're wrong. Like I got hated at the top last time by thinking we were going to have that. Right. So it's also very difficult to manage. So it's complex, I would say, but we don't have to care this year, which is lovely. But let's look at the scenario where rates don't come down much.
Sure.
Because that's what people are worried about. Let's assume that they do manage to squeeze in a few rate cuts, 75 basis points. Well, that reminds me a lot of 1995. In 1994, we had a massive move in rates. Banks went under, same situation. Markets puked, they hated it. And the Fed, everybody thought there'd be a recession, didn't get one. And the Fed cut twice or 3 times, 75 basis points. Nowhere near where it would come back from. And they kept them on hold, basically, until 1998 when the Asian crisis came. They cut it a bit and then raised it once and then cut it, but nothing really. It was basically stable rates. So everyone's like, well, if they leave rates here, well, that's nightmare for the markets. Well, the cost of 5% interest rates in a market that does what? ETH does about 175% a year annualized. So 5% interest rates are irrelevant, which is why you can have funding rates of 65% and people still pay them. Secondly, back in 1995, 96, 97 into 98, the market went up, the S&P went up 160%. And that's when people would say inflation kind of rebounded a bit. All of the usual stuff was not bad. The markets don't like rate of change. Stability, more than happy with. Everybody adjusts their cost of capital and everybody carries on their business. Now, obviously, if you bring rates lower and they bring it lower faster and they push more liquidity, liquidity is actually the big thing in the system. And, there's various ways of measuring liquidity, but liquidity has been rising, global liquidity, not by much, but enough that bottomed the crypto markets and everything else, and the forward-looking indicators suggest liquidity continues to come into the system, and that liquidity ends up flowing down the risk curve or acts as a debasement of fiat because it's a global liquidity measure which optically pushes up the price of assets.
Central banks, particularly the US Federal Reserve, have been sending mixed signals regarding rate cuts. While many market participants believe that rates will remain steady, especially not returning to the levels seen during the pandemic, Powell holds a different view. He argues that the staggering debt burden leaves central banks with no choice but to significantly reduce rates and resume printing money. Powell asserts that the Fed, for example, would struggle to manage interest payments on the massive $34 trillion debt at current rates of 5%. This perspective aligns with the sentiment driving the gold market, which has repeatedly reached new highs in 2024. Despite the possibility of high Fed funds rates, Powell remains fervently bullish on the cryptocurrency market both in 2024 and beyond. He believes that regardless of the macroeconomic conditions, cryptocurrencies will continue to thrive. What are your thoughts on Raoul Pal's interview and his predictions for Bitcoin and the broader crypto industry in 2024? Feel free to share your comments and observations below. Don't forget to subscribe to the channel, turn on post notifications, and hit the like button for more insightful videos like this. Thanks for watching.